Welcome back to Investing and Trading Live with Josh and Al. We are talking about investing, also trading strategies for regular people. We call it the retail investors. And we had tickets that we gave away to in the last segment for an investing class to learn what these techniques and strategies are that we're talking about. It's a physical place to go to be able to show our listeners how these markets actually work and what these strategies actually are. So that way, hopefully, moving forward, you can make smarter investing decisions. Text right now. Text the word investing to the number 210 210. That's text investing to the number 210 210. So, Al, in that last segment, you talked a little bit about the income strategies, shorter term, that have the opportunity for people to have that second source of income.
hmm
It's a strategy that's designed for that. Now, we have people that are listening, a lot of people that have retirement accounts, 401ks, they have IRAs, 403bs, TSPs, whatever retirement account they are, but they have capital in there, but they don't feel like they have enough. And what's happening really in America is people are struggling to retire and have enough. So what they're doing is living off a fixed income or Social Security, which is worse yet because that doesn't last. There's not very much there per month. So people want to have more opportunities at retirement time. They don't want to spend those golden years at the golden arches. So let's talk about those retirement strategies with 401ks. Let's start off if somebody is still working right now and they have a 401k.
hmm
Um, yeah, let's start with that one. A 401k. What are some of the options they have to protect what they have in these down markets, but also to take advantage, hopefully better than what their work or their company sponsor is doing?
Well, you mentioned the word protection. What can they do to protect what they have? That is the number one thing that you have to be aware of, regardless of whether you're retired or you're still working. Any kind of an investment you have, you should have protection on that investment. If in the first half of this year your portfolios took a big hit, and we are seeing so many people come into these classes that are really angry because they lost hundreds of thousands of dollars in the first 6 months of the year, and they're upset because their brokers didn't protect them. They never really had a good strategy in place to do that. So number one, if you have a 401k, 403b, or any kind of an employer-sponsored plan, first of all, identify what you have in that plan. What are you invested in? What are your choices? We have been talking a lot about trading outside of retirement plans where you can use our strategy to identify when to get into and out of something. You can use that same strategy and trade within your 401k, 403b using that strategy. If you have a particular asset, say it's a mutual fund that invests in a particular area, say it's technology or financials, well, you can look at a chart of that and you can see if it is moving into an area where it looks like there is a what we call a supply zone where there are sellers that want to get out of that particular asset or buyers that want to get into it, you can maybe rotate out of one part of what you have in a 401k and go into something else. You can always go into a cash or cash equivalent uh, portfolio that you might have access to. Hopefully you do. That's one way of protecting what you have. But trading within your retirement accounts is something that you can do, and you can have the potential for much better returns and for protection there. You can have an account set up outside of your 401k that is, let's just call it a protection account. It's an account that will hedge what you have within that account, within that retirement account. So if it goes down, the hedge account will go up in value. If you are still working and you have a 401k and you are putting in more than what is matched by your employer, maybe you want to look at taking that money and putting it into a self-directed IRA where, number one, you're not paying fees because the fees you pay for an employer-sponsored retirement plan are eating a significant portion of what you could have in retirement. Possibly as much as 50 to 70% of what you could have is gone because of those fees. So a self-directed IRA, you eliminate the fees. You can use the assets we've been talking about, futures, Forex, the options market, those leveraged assets. And by the way, futures and Forex trade 24 hours a day. Uh, you have access to, making or doing your activity when you want to. You don't have to be available just during 6.5 hours of the stock market. But you can use all of those assets. You can trade stock. You can trade mutual funds if you want, but you can have protection. There is an asset that we talk about in these classes that functions pretty much as an insurance policy for your portfolio. That's available to you in a self-directed IRA. Within those IRAs, you can trade in an up market, a down market, a sideways market, so you have access to all three directions of the market. But number one and two. Number one is you eliminate the fees. Number two is you can have protection on your assets. And we teach you how to do that. We show you how these assets work. And maybe one is ideal for you, and for somebody else, a different asset's ideal. But let's look at what you're looking at. How unique are you, and what's your goals, and then help you identify the right asset and the right strategy to help you achieve your goals.
Yeah, I think fees, Al, it's a great comment. Is that's one of the most detrimental things to a retirement account, because if you're paying fees along for someone to just hold your capital, why not just do it yourself?
Right.
It makes more sense, because then you're keeping more of your capital. It's not going to a stranger that says says some nice things to you once a year, right? So we have these investing classes that you can actually dissect that a little bit. Bring these questions that you have in about 401ks or IRAs and talk to Al about it. So text the word investing right now to the number 210-210 and just come see what these opportunities really are. We have these classes at Online Trading Academy locally, so you can actually be shown what that is, and really talk to some people that have been in the markets for sometimes several 20, 30, 40 years. So text the word investing to the number 210-210 right now for those tickets and a quick start kit. So you're talking about self-directing. A lot of our listeners are probably thinking, well, how do you
Mhm.
how do you do that? Where do you go? How do you start that account? Just kind of explain that process. And I know you've helped thousands, probably a lot of people at Online Trading Academy how to do that, but what's your go-to process for that?
Yeah. Well, first of all, I one more comment about 401ks. What we're finding a lot, Josh, is people that are coming in that are retired that still have their money in their employer's 401k plan. Now you're no longer getting a match, but you're still subject to those fees being taken out on a regular basis, and you're also exposing your assets to big downside moves, to bear markets, to corrections and crashes. That's what you want to eliminate. So, setting up the self-directed IRA may sound, a little frightening to you. You might be a little afraid because now you're thinking, well, now I have to make the decisions. You already are making the decisions within the 401k that you have. The plan sponsor is not giving you specific advice. Almost everybody that comes into the classes will say that we're not having any meetings with the plan sponsor. So we can help you identify the process of making that transfer. Anytime you leave a company for whatever reason, whether you're retired, fired, laid off, or you just quit, that 401k that you have can be rolled into a self-directed IRA. It's an easy process. The firm that
Do you pay tax on that?
No, there's no taxes and there's no penalty as long as it goes from one qualified retirement plan into another,
So
which is
very similar from going to like a bank, Wells Fargo to Huntington Bank, or
right.
Chase to Wells Fargo.
Yeah, and I'm glad you brought that up because a lot of people are concerned about that. There
Yeah.
is no penalty. There is no tax due. The taxes are due when you take money out of those accounts, whether it's a 401k or an IRA. But you can easily set up these accounts. You have access to many more things, but we can help you put together a plan that's specific to you that utilizes the right asset for you. And people are different. We see pretty much every personality type you can think of. Some people are a little more risk averse. Some people are willing to take on a little more risk. There are different strategies that you can use. But by the way, when we say take on more risk, we're really talking about looking at assets or strategies that give you the potential for higher returns, but we're also going to show you how to manage the risk and
Minimize it.
minimize it, right. And there are management techniques that you can use. You should never have a big loss. You may have some small losses, and that's fine. Those small losses are pretty much offset by small wins. But if you eliminate the big losses, the only thing left are big wins. And that's what really propels people. That's what really creates wealth for people. So don't let your lack of knowledge of how to do something keep you from realizing what your full potential could be. We'll help you with that. And you can come into these classes and ask us questions and ask for, if you need some guidance, if you need some help, that's what we're here for.
Yeah, there's a lot of our listeners, Al, that have 401ks, IRAs, and like you mentioned, maybe move to a different company or something, leave the company, and it just sits there with an old broker advisor.
Right.
And that's really putting your money and just letting it sit on your curb. If you think about it, it's sitting with a stranger, and somebody could, like the market, could technically come and take it away. Like it's what's happening right now for a lot of people's for retirement accounts. That's why it's so important to be able to do that yourself. Learn the skills and techniques to manage that yourself, protect it yourself, and learn how to grow it in all market conditions, no matter if it goes up or down. We talk a lot about that in these investing classes, local at our academies. You can text the word investing to the number 210 for 2 free tickets at one of our classes. Al teaches these, I teach these as well. It's great thing is they're only 2 hours, right?
Right.
And people have the opportunity to take a little bit of time to learn about the financial markets and hopefully improve their financial future. But you have to start. Text the word investing to the number 210 right now. Coming up next, we're going to continue to talk about these retirement accounts and income accounts and dive into a little bit more what these other assets are so our listeners know there's other things out there and other opportunities. Coming up next, this is Josh and Al, Investing and Trading Live.